Welcome to the Stock Street. This is Raj. Let's check today whether it's a bull market or a bear market or a tug-of-war between them. And I will give you the clear picture of it. This channel will provide only the news and facts of education purpose. So what does it mean? You can ask me. My answer is simple. We don't provide any trade or stock recommendation, only news and facts to empower you with the insight for a smarter choices. Let's check what's in for the trade. I will provide you the complete. On this video, we will check on the market overview, institutional flows, positive impact news and its stocks, negative impact news and its stocks, and then at last the global cues. Let's see indices. Nifty and Sensex traded flat. Sensex is down by 7.25 points. Nifty is up by 6.70 points. GST-led rally continued for the third consecutive days. On today we can't say it's a rally, it's a flat, but Nifty is positive. In today's market, we saw a tug-of-war between a strong domestic support and profit booking at high levels. Today can be bisected into 2 hours. GST/ powered the opening rally. Auto and FMCG sector fired up the chart, lifting the overall sentiment. However, as day progressed, profit booking erased the gain, particularly in IT and FMCG sector, which pulled the indices back from their intraday high, whereas the mid and small cap stocks performed well today, but large cap faced the pressure. FII sells rupees 106.34 crores and DII buys rupees 2,233.09 crores. It's a tug-of-war where FII were a net seller and DII were the strong net buyer. Foreign institutional investors are continuing the trend of pulling a capital out of the Indian market, influenced by the global cues and geopolitical risk, including the recent US tariffs. However, the domestic institutional investor pumping in a massive amount of capital, effectively countering the FII selling pressure. The inflow is signaling a confidence in the domestic growth story and preventing a sharp correction. Let's check on the positive stories and its impact. First, gear up. GST 2.0 reform. GST Council proposal to slash a rate cut across key goods, especially automobile, is nothing short of a festival gift for a consumer. Lower price means stronger demand, and with the festive season around the corner, this move is a big catalyst for the auto and consumer sector. Expect auto stocks to rev their engines and consumer names to light up the charts. Net strong domestic GDP data. India's Q1 GDP came in at a robust 7.8%, comfortably beating the expectation. At a time when global economics are struggling with the slowdown fears, India has shown a resilience and strength, cementing investor confidence in the country's growth story. This data isn't just a number, it's a confidence booster for the long-term investor and a trigger for a bullish sentiment on a Dalal Street. Next comes the China steel output cut. It's a big action in a metal today. Reports suggest that China is gearing up to cut the steel production in order to meet its environment goals. Now here is why that's a game changer. China is the world's largest steel producer. So when Beijing talks about cutting the output, it signals a potential supply squeeze globally, and when supply tightens, prices usually head one way up. The reaction was instant. Dalal Street witnessed a full-blown metal sector rally. Steel and allied stocks caught the fire as an investor bet a strong realization and improved margin in the months ahead. Above are the news that drive the following stocks. Due to the GST rate cut, Mahindra & Mahindra, Tata Motors and Trend saw a price increase, whereas Mahindra & Mahindra is up by 11.3% at 3,000 and it is trading at 3,561 rupees. Tata Motors gained 5% to 1,005 rupees. Trend rose like 4.5% and it is trading now at 5,520 rupees. Due to China's steel output cut, the main beneficiary here it is Tata Steel. You know, Tata Steel have a lowest P and it means it's a value stock and it gained the momentum too. Tata Steel added a 3.5% to 185 and it is now trading at 185. And next comes the power grid, which is due to the government focus on infra development, and it is up by 3% and now it is trading at 285 rupees 0.80 paise. Let's see on the negative impact news and its related stocks. IT and FMCG cool off. After a strong rally, IT and FMCG stocks slipped as an investor booked profit. This is a normal investor behavior, but it's something we should keep an eye on. US tariff shock. The US has announced 50% tariff on some of the Indian exports. That's a big blow for an export-focused company, and one of the reasons why foreign investors are selling Indian stocks. Next comes the rupees hit a record low, adding more pressure. The Indian rupee falls to a new lifetime low against the US dollar. Why? Tariff plus heavy selling by FII. Those two are the main reasons. And a weak rupee means import cost more, and that could push the inflation higher. The message today is clear: to be cautious on IT and FMCG. Following are some of the stocks that are impacted due to the negative news. ITC fell like 2.1% to 407 rupees. Investor worried about a new government tax on tobacco products, which is called as a sin tax, and the tax is like almost 40%. Actual name is sin space tax. And next comes HUL. HUL dropped almost 1.5%, and it is trading at 2,633 rupees. Some profit booking and concern over the weak rural demand pulled the stock down. Infosys slipped 1.2% to 1,000, and it is now trading at 1,444. The IT giant is still facing the slowdown worries from the global market. TCS was down with 1%, and it is now trading at 3,048. Just like Infosys, it got hit by a weak global client demand. Divi's Lab eased 0.9, and it is now trading at 6,009 rupees. The stock saw a selling pressure in the pharma space. In short, FMCG faced a profit-taking, IT stocks struggled with the global slowdown fear, and pharma also felt the heat, showing that even safe sector came under a pressure today. Now we will check on the global market. Global market had a mixed but generally a positive tone, which provided some tailwind to our market. Dow Jones gained 0.79 as a weak US job data raised the hopes of Federal Reserve rate cut. This optimism lifted a sentiment on Wall Street in the second half of the session. S&P 500 added like 0.84% thanks to the same rate cut buzz and a strong tech performance. And there is a positive sign for the Indian market also due to this, especially on the tech and the growth stock. Next comes the Nike. 225 rose like almost 0.88% as a weaker end and strong ending in the key Japanese sector, set as a positive trend across Asia, so India will also be benefited. Next comes the Hang Seng jumped like almost 1.15 on the back of China's regulatory reform and stimulus measure, a move that directly supports the Indian metal and commodity stocks, which we saw today in on the steel, where when the steel output cut on the China had a direct impact on our metal stocks. Next comes the FTSE 100, which edged up like 0.42%, helped by easing energy prices and spillover sentiment from the US. While the impact on the India was limited, it added to the overall global positivity. Thanks for watching the video. If you found this briefing helpful, smash the like button, share it with a fellow investor, and don't forget to subscribe and to get notified. Thank you.